Good afternoon, everyone. Happy Friday. What a week it was. Gabe Velazquez here with you, transparenttrading.solutions.com for a Friday. This is March 10. Lots happened since I was with you on Tuesday, right? Let's start there. I do have a class coming up a week on Tuesday. Really a good topic here, especially with what's going on, volatility increasing sharply, which is great for us as traders. That's actually what we need to generate profits and so forth. So again, if you are interested in, I'm talking about a very specific type of setup for breakouts, and specifically on the S&P 500. So we're going to be very specific on that. So again, if you want to join me for that, go ahead and click the link below and register. That would be Tuesday, the 14th at 4 Pacific, 7 Eastern. Okay. All right, let's get into the market. So the big story, actually two things, but really overshadowing everything, as you all know, unless you've been living under a rock. Silicon Valley Bank, one of the biggest blowups, literally in 2 days. Again, kind of reminiscent of the great financial crisis. That is really what essentially turned everything topsy-turvy, really. We were kind of we had that first, the Fed announcement on Tuesday. We saw that. We talked about that. That had the first leg down. Then we kind of went sideways in terms of looking at the non-farm payrolls. And then Thursday was when this thing hit. And that really knocked the market for a loop. That really kind of messed things up on the charts, really, also in terms of, because we were expecting just we were consolidating on Thursday, and then around midday when news came out that they were a run on that Silicon Bank and so forth, then the market took another leg down. And again, that has been the story this week. And it is, again, it did create a lot of dislocations all over the place. So let's talk. First of all, I want to actually, we'll get into the charts in a second. Pull up your charts, because charts are really interesting. But there's actually three things that I want to talk about. First of all, bonds. So one of the fallouts, or one of the consequences from the fallout of this bank, going insolvent, basically it went to zero today, and it's incredible, because that was a $600 and some odd stock, literally goes to zero today. So just and again, this is sometimes this happens, and we saw that happening. When I was back in 2000, when the tech bubble burst, we saw that. We see this throughout, the savings and loan crisis in the early 80s and so on and so forth. So it's not really, and this is what happens when, we saw that with FTX, this whole leverage and the rate of the increases. So, I've been talking about to my members that, the pace of the rate of the increases could break something. Maybe again throw us into a recession, whatever, but the strain on these banks is being felt now. So in a nutshell, VIX wrote about this weekend. VIX at 18, put on some long-term hedges. If you guys don't get my newsletter, I wrote about this last weekend. If somebody wants a copy, by the way, of last weekend's newsletter, ping me at support@Transparent Trading Solutions, and we'll send you a copy. I did write about this. Basically, I ended the newsletter by urging everybody, if you want to buy long-term protection, it was with the VIX at 18, probably a good time to buy it, especially to hedge off your long-term portfolios. Since then, the market has dropped. The S&P has dropped, close to almost 250 points, and probably going low. So just on that theme, the VIX closed today at 2480, but it did spike to 29 earlier today. So check out your chart of the VIX. This is the volatility index. It did make a high. Looking at the it did make a high at 29. The next level, if and again, we could go into another sell-off on if there's some other kind of skeletons in the closet, if you will, repercussions, any kind of systemic type of, which everybody's talking about. It's not there, but that's what they were saying back in the not in the financial crisis when everything got unraveled. I'm not suggesting that's going to happen, but you just never know. And usually, bad Fridays don't. There's going to be two scenarios on Monday. I foresee we're going to have the big washout that I've been looking for. Possibly wouldn't be a shocker to me. That's VIX spikes it to 35. And that actually is presenting opportunities. In fact, we wanted to buy some banks today. We were actually looking to buy JPM. Notice JPM was up today. We actually were trying to buy. I thought it was going to go a little bit lower, but we're still buy. We're still going to look to buy some of these banks. There's going to be some opportunities, especially the money centers. I wouldn't touch any of the regionals, but the money centers like JPM or Citi or any of those, I think are going to come up to some really great levels. So we are in particular looking to buy JPM with some calls. Also, the metals rallied. I think I mentioned last Tuesday we were long NEM. The dollar plunged, did recover a little bit. The other big story this week was the bond market. And so I get a lot of people were kind of puzzled. Literally go back to Thursday, and when that news hit and the market sold off, look at the move across the bond markets. The 2-year, the 5-year, the 10-year, the 30-year, incredible moves. And unfortunately, again, we missed the TLT by 30 cents trying to get long. And that thing closed at like 10. Let me see. Sorry, give you my back here. 106, I think, is where we closed. So, these bond markets, and what it is essentially is flight to safety, which we haven't seen in a long time. So if you think about like the last 12, 13 months, stocks and bonds have almost been trading in lockstep. In other words, when bonds go down, rates go up, stocks would go down, and so forth for the most part. But there is a clear change in that narrative starting on Thursday. You can clearly see them, especially the 2-year. I mean, that thing just went up like a rocket ship as soon as that news broke. So that's going to be an interesting dynamic going forward. The next piece is obviously but again, it's still too early to say whether there's going to be any further contagion in the banking system and whether it causes more dislocation in the banks and so forth, more run on the banks, panicky people pulling their money out of the bank. So those are the really key themes. Now, in regards to the S&P, essentially we ran up to that 4,100, broke 3,900 decisively yesterday a little bit, and then for all intents and purposes, I mean, we did close near the lows, 38.65. But if you were trading today, intraday, today was very choppy. We actually attempted a rally right after the non-farm payrolls this morning, which really were overshadowed by the banking thing. Even though we did have a higher jobs number and a higher unemployment rate, and in fact, we did attempt the rally first thing right after, actually rallied all the way to 39.41 and essentially just chopped around. On the charts, I'm not really, in terms of any new buys, I'm not really looking at anything on the S&P in terms of quality levels. Now, that doesn't mean the market's going to fall straight down to there. I mean, we could get a bounce, whatever. Things change quickly. But 37 in the 37.65 area is where I am actually seeing the first level on the S&P futures. So check it out. One of the things also keep in mind, currencies and futures are not trading the June contract. So make sure you're looking at those charts as well there. Okay. So and then, if we get a rally back up where we broke down from around 30, 39.50-ish. That could be a selling opportunity there. NASDAQ, interestingly, I think I gave you guys a level, 11,767. We didn't even get there. So that's really interesting. We just barely broke the pivot. So in fact, the low for this is really tech is still actually outperforming the low 11,832.50 from last week. We broke it and we actually closed above that. So check out your NASDAQ futures chart. You can see that the NASDAQ actually is still hanging in there pretty good relative to the S&P and the Dow. There's that big pivot. And again, we did get a little bounce and actually closed above that. So 11,767 is the first level on the NASDAQ. And then if we break that, we go all the way down to 11,400. So, but NASDAQ hanging in there relative to, the other indexes. The one that took the biggest brunt of the selling because of the fact that it's got a lot of banks in there. I don't know if you guys know that, a lot of regional banks or whatever, was the small cap Russell. That thing really got battered. And really there on the charts, not a whole lot either. I'm not really seeing anything till we get down into the 1650 area on the small cap. So that could be, that could actually still be very, very weak going into next week. So we'll see what happens there. Now, what happened with the big sell-off is it left some really nice levels to short against. Also, right around the 1830, 1840 should be a good selling area in the Russell 2K. So Russell's opening up some opportunities there. Bonds, big rally across, as I mentioned, in terms of new levels. I've been talking about the 10-year as a leading indicator. That thing rallied almost 3 points since Thursday. The news came out. We are coming up to some levels in the 10-year, 114-ish, 115, where we broke down from. So that could be a selling opportunity in the 10-year. Okay, and the 5-year similarly. Looks like around 109 on the 5-year. By the way, the 5-year did hold the daily accumulation at 106.05, 105.29. If you were looking at your charts there on the 5-year, and then the 2-year made a new low. That was like an all-time low on those charts, and then jumped really, really hard. That's actually setting for a buy on a pullback. In the 2-year, if you never traded the 2-year, that's the short end of the yield curve. 62.50 a point, $2,000 actually for the full one full point. It's 62.50 for every tick if you haven't traded that. So very interesting dynamic there with the bond market. Maybe we go back to, I know it hasn't been working for probably over a year, the whole the whole kind of flight to safety where stocks go down, bonds go up. That hasn't worked for like almost going on a year and a half since the Fed, since rates started jumping really hard. So that could be changing now. It's going to be interesting to see. And that is a kind of a fear gauge now. The reason we had such a huge rally in bonds is because, again, people are fleeing the stock market, going into these high yields, going into these 4 or 5%. Again, you could get 5% on a 6-month T-bill, which is pretty darn good. It's also tax. If you guys haven't done that, I think I mentioned that before. I've been talking to my members about that. You got any retirement money or whatever you want to put to work? And in fact, if you did that last week when I was talking about, when I was talking to my members, you actually have some capital gains because as rates have fallen sharply, as you saw, the bond prices are going up. So you get that extra kicker that people don't realize, especially if you go out a year and we have much lower rates in a year, you could actually get some capital gains if you sell them early. if you because bond prices will actually be much higher if yields go lower. And also the long dated bonds, that's what's killing the banks, is if you have a 20-year or a 15-year or a 10-year note or treasury bond that you bought 2 years ago when rates were like 0.5%. And that's part of what killed this bank here, is they had these long dated bonds 20, 30 years out, and now they're trying to sell them. Well, rates have gone from 0 to 5%. Those bonds are now down 30, 40% if you bought them at 0.5%, if that makes any sense. So that's where a lot of the dislocation is happening in the bond market as well. If you bought long dated bonds before the huge rate increases that have occurred over the last year and a half. It's also dollar. Dollar was all over, very volatile. We did, I mentioned last Tuesday the 105.82 level on the dollar. Hit that, fell off to the accumulation 104.06. So these levels on the dollar have been working pretty good. If you are looking at your charts, and these corollaries have actually been working pretty good too. So you had a big bounce off of 104.06 on the dollar. We had rollover in the currencies, which kind of distorted all the charts. The only currency that, again, back to the yen, which is a safe haven currency, that thing rallied hard today. And the peso now is kind of loosening its grip, or the dollar is loosening its grip on the peso. So you can see the peso, remember 55.80, that big weekly, monthly distribution area to supply level. The peso fell off pretty sharply and didn't bounce as the dollar, came off. So that was really interesting. Looks like the peso is kind of trading on its own merits, if you will, on that. So there is a level I'm looking at to go long peso, 50 in the 50, 51.00 level. Check it out on your charts there. I wouldn't be buying that until it has a really sharp pullback. It went parabolic, as you know, but the yen and the peso still look pretty good. The other currencies have some levels, but it's still largely, by and large, just kind of chopping around. Gold had a nice move today. That also looks interesting. We are long NEM calls, Newmont. So that's going to be interesting to see if gold finally also starts catching a bid as a safe haven kind of, that's traditionally been, hasn't really worked. But again, things are changing, with bonds rallying. You can see the big move in the in gold. Came off of that big, ugly daily accumulation, 1814, 1781. We had a really nice pop in gold today. You see that it was up almost $40, broke out above 1862. So that's going to be really interesting. Also, silver also got a nice pop. Still kind of the weak sister. I would rather go with gold now. And then copper just kind of chopping around. So nothing really going on with copper. That's not really moving a whole lot. In the energy space, not really much to talk about with, oil. We were trying to get long oil. We almost got filled on our USO calls this morning. And then, oil kind of just hovering, not really doing a whole lot, but it did get a nice little lift. It got sold with the whole, recession and the banking thing and the dollar. But now it's kind of, hovering around the 76, 75 area. The lower end of that range is 73. That's why we're trying to get long at the lower part of that trading range. You can clearly see on the chart 73 to like 82 are the levels on oil. And then nat gas looks like it's found a little, it's still kind of weak now after the gap from last Sunday. Seems to be just kind of meandering about this 240, 250 area. Very, very quiet today, which is really interesting for nat gas. Usually not that quiet. You can see today's action was just very, very tightly wound up. As long as it can hang in here, there is a gap, by the way, if you are looking on the futures chart, there is a gap a little bit below current price to fill, which is around 237. You see that right there. Maybe we fill that gap and bounce. We'll see how that goes. If it breaks through that gap, then we're probably going to go test $2 again. There's not a lot going on with nat gas. It's all weather and supply and demand, and still bullish long term, but you never know. We're still in the boil, very, very tiny position. So it's not gonna be a big deal if it doesn't work out. We have our stop below 2 on the boil. I'm basing the stop based on the futures contract. And then the grain markets, not a lot going on there. We had that report on Wednesday. One of the things I've been talking to you guys about was the wheat market. So we had a nice rally. We were looking at 658. Look at your daily, weekly charts on wheat. There's some levels, two levels, 658, and then around the 640 area. Never, kind of barely missed that by a couple of points, and then it took off today. So that was interesting. See if we get any follow through on wheat. Maybe putting in a bottom. We'll see on wheat. That's the one market, and then corn really is the other market. Corn about the $6 mark. We hit a low of 606. So we're kind of coming into some of these levels in the grain markets that are becoming very, very interesting to me. So that kind of wraps up the week. Very interesting, very positive for us as traders because of the increase in volatility. One of the things that's had been very challenging still, for a lot of folks is this whole kind of, chopping around in the S&P, not really having any movement. We haven't really had a jump in the VIX this hard. In other words, from 18 up to 30s since last fall. So it's going to be interesting to see if volatility stays elevated. That's going to be great. Looks like it is, and that is actually a good thing because we need volatility to produce profits. And on the options front, also has been a challenge because again, a lot of these stocks aren't moving, but now that we're getting some movement, it's going to be really great. And so looking forward to next week. We got CPI next Tuesday, PPI. So we got some more inflation numbers coming out next week. That's going to be interesting. Once this whole banking thing kind of subsides, if it does, that's obviously taking up all the air in the room right now, overshadowing a lot of stuff. So it's going to be interesting to see how that all plays out, if there's any ramifications, any ripple effects across any, maybe, is that the last shoe to drop, so to speak? So, okay. So one last thing, again, if you want to sign up for the class, you want to get the newsletter, if you want a copy, if you're not a subscriber to the newsletter, you want to get a copy of the newsletter I wrote yesterday when I talked about the VIX at 18 and 17 and buying some long-term protection, you can just ping me, support at Transparent Trade Solutions. We'll send you a copy. Okay. Other than that, have a great weekend, everybody. Get ready for next week. Tons of opportunities. I'm really excited for next week. I think we're going to get, coming out of all this choppy kind of narrow trading. That's the one aspect. When crises hits, volatility expands. That opens up a lot of opportunities that were not there in the last couple of weeks, even in the last month. So, but you got to have the right strategies, and you got to have the discipline and all that stuff we talk about. So, join me for the class, and I'll show you guys some really. If you're frustrated because even we really hardly got any pullbacks in the S&P this week, right? It was basically you had to be in the breaks to catch some of that momentum. If you're waiting for pullbacks, the only pullback we got was on Tuesday, and then everything kind of just fell apart, went sideways, and then kept going lower. So there are some strategies that we can implement. So join me on Tuesday, and we'll give you some specifics on that. Okay. All right, everybody, have a great weekend. I'll see you on Tuesday. Take care.